Hey everyone, before we get into the charts, we've got another free ebook. This one's a doozy. Highly suggest you check it out. The link is in the comments of the YouTube video here. It's all about market correlations. You've heard me say it 100 times. And Chart Guys Jungle Funk Joey, who many of Chart Guys members know, wrote a real good one as far as an in-depth ebook, how to spot correlations, how algo trading has changed the game, when markets are correlated in bullish and a bearish way, how to use this information, and visual examples. This is probably one of the better ebooks that we've put out in terms of in-depth information that is useful. Hey traders, checking out the stock market today. Bulls finally showed up. I had 4 clear criteria that I needed to see to trust the bulls fully today, and they checked off all those boxes. We'll go over what that was in just a moment. We've got Powell speaking at 9:10 a.m. Eastern tomorrow. Perfect timing to shake things up right before the bell rings. But we are looking at a bounce. So we started the morning saying if the bulls are going to show up, the best case scenario, really the only thing that the bulls can hope for from here is a falling wedge. So posted on Twitter this morning, first thing, these falling wedges on the S&P 500 and the Nasdaq futures chart, and they have now broken bull. So that has started the daily bounce. We're keeping in mind a number of things. Number one, we have not seen a 4-hour trend change back to the bulls, so that's going to be needed if we're going to have confidence. Let's say we have a bearish reaction to Powell tomorrow morning. Bulls would need to hold a back test to set a higher low and then confirm a trend change if we're going to see follow through. And number two, we need to see, same thing, but SPY needs to see hourly uptrend continuation, higher lows and higher highs. So I've been talking about how Friday, the high of Friday, is a very key level for me. But bigger picture, we're scouting weekly higher lows. And this is the first step towards weekly higher lows potentially forming. So we can see the SPY weekly candle right now with 2 trading days left to go is a bullish reversal candle. Obviously, Powell tomorrow is going to shape things a little bit. But keeping an eye out for the weekly higher low. So the 4 criteria that I need to shut off these fidelity alerts. The 4 criteria that I needed to see for believing the bulls, because we've seen bounces from the bulls over the last few days, and they haven't resulted in any follow-through. I needed to see all major sectors at the high of the day at the same time. That would be a big vote of confidence. We saw that this morning. Needed to see QQQ leading, as I've mentioned many times. Relative strength and weakness, QQQ divided by SPY. It wasn't a huge leading day, but this is green because we closed down here. So Nasdaq was stronger than the S&P 500 today overall. Again, not by much, but enough. That gets the check mark. Third thing was needed to see the VIX reject from this quadruple top resistance zone on the 4-hour time frame. And this is that resistance zone. And this morning we had a 4-hour stair-step pattern, and that broke into 4-hour consolidation. Check mark number 3. Tomorrow we have to be watching for the potential of an equilibrium forming if the bulls are able to hold 23.19. How that breaks will be key. And the 4th thing was the dollar. Dollar needed to see notable pullback and ideally lose the 4-hour support that was established pre-market. And we've got that. I know that if I'm scouting a weekly higher low in the broader market, which I am, we need to see the dollar lose the daily uptrend and ideally lose daily EMA 12 support. So we have a level of 109.37 coming into play, and then daily EMA 12 will be behind that. But that's something that we have to see happen. And this is a straight drop for the dollar. We haven't confirmed an hourly downtrend. We haven't confirmed a 4-hour downtrend. If we bounce from here, we'll be watching for potential head and shoulders. So again, all these things would potentially align with each other. As I just drew on the futures chart, if we pull back on that 4-hour and head back down to potentially back test that falling wedge previous resistance, now support, this is the Nasdaq, same thing. If that happens, if the market pulls back there, then that means the dollar is likely bouncing on the 4-hour. The VIX is likely bouncing on the 4-hour. And so these things could play out. So if it's a bearish reaction to Powell tomorrow morning, it's not game over for the bulls. They just have to ensure that they set that 4-hour higher low and then see continuation. There's obviously a lot of bears, as bears have had complete control since Powell last spoke. So today was, I won't call it a short squeeze, but there was definitely pressure being put on the bears consistently all day, especially in that last 2 hours of trading there, where it was just a grind up. But that's essentially what we're looking for here. I personally am not doing a ton of trading this shortened holiday week, coming back from being away from the screen all weekend. But today was the kind of day where I was scouting bearish entries on the morning. I got myself in a risk-free short because QQQ had a nice rejection from just under the high of yesterday, actually just under hourly resistance, 296.04. So I was watching the morning bull move up. We've seen that bull move fade plenty of times. Had a good entry for my short, exited half into the pullback, and then stopped out. And then from that point forward, I wasn't very comfortable entering long positions at that point, but I knew not to be fighting the bears. And so I stopped looking short on the S&P 500 and the Nasdaq. There was still another short in the energy sector. We'll look at that. But that essentially was me saying, all right, I'm going to let my SPY and CCJ swing positions do their thing for the bulls and just going to stop trying to play bearish. Because again, for me, the signal was, I had a game plan on the morning and said, okay, well, maybe I'm going to look to re-enter my short position if this happens. And then all major sectors hit the high of the day at the same time. And I took that off the table. And again, a general rule of thumb, if you find yourself trading counter these trending days and fighting the trend all afternoon, try the rule. If all major sectors are hitting the high of the day at the same time, you do not short that day at all. You don't even attempt a short trade. And if they're all hitting the low of the day at the same time, you don't attempt any long trades. There will be some missed trades, but generally speaking, it will keep you from fighting momentum. So both QQQ and SPY and a lot of individual names have a lot of space for an hourly higher low to form. Next pullback. And we'll be watching for that next time we pull back. Nasdaq, same deal. 4-hour bull break. Daily bounce is underway. The weekly candle is a bullish reversal candle. Still 2 trading days left to go. Highs of Friday are key. If we don't break the highs of Friday, essentially we have to see the 4-hour trend change to the bulls breaking the high of Friday for us to say that the weekly high or low is likely shaping up. Semiconductors have a base of support, SMH 204.16, 18, and 49. Now it's all about the high of Friday resistance, 214.57, to see if the bulls are able to shift momentum into a weekly bounce. Bulls have a lot less space to work with for that weekly bounce to set that higher low on SMH than other sectors, but it is still possible. Anything above 189.94 is a weekly higher low. Again, what we're seeing in this current market environment is I talked about the bear frustration and now the bull frustration, but we see the scales just tilting back and forth. And so the question now is, everybody that was going to short from Powell speaking last Friday has done so. Everybody that was going to exit longs that was going to, from Powell speaking, has done so. The question is, do we now see only longs buying the dip and short covering? And that's what happened this last time we saw the scales tilt into this big bounce. A lot of that was shorts covering. So we know there's a whole bunch of shorts here again. How much pressure is going to be put on shorts? If we don't break the highs of Friday, it's just a daily lower high and they can remain comfortable. If you break that high of Friday, then bears start to have a little bit of concern depending on when they made their entries. Healthcare, trying to get over the high of Friday. Big green day today. Resistance is 127.66. Get over that level and the weekly bounce is underway. Weekly chart is a bit less clear here on healthcare than other sectors, but trying to reverse that momentum. Financial sector, double bottom the last 2 days, must get over the high of Friday, 33.81. IWM, solid bounce, held the low of yesterday first thing, must get over 183.95, the high of Friday. If we're going to see, really getting over the high of Friday is needed to create enough space for an eventual daily trend change attempt to try and take place. If we don't break the high of Friday, we don't have that space for the trend change attempt. And we will need daily trend changes to confirm eventually if we're going to have any confidence in weekly bounce follow through. Biotech sector, Relative weakness yesterday, relative strength today. We broke the low of yesterday by a few pennies, but pretty much a double bottom. And we could see that relative strength really early. So look at this 5 minute, the first 20 minutes of the day, bull move up, 10 minutes of consolidation, really 20 minutes of sideways, and then another leg up. QQQ at that same point in time, same move up, but pulled back and kept dropping. While this was happening, XBI was trading right here for 20 minutes, and QQQ kept dropping and hit a new low of the day here. So XBI was showing us notable relative strength comparative to QQQ, and then once the QQQ bulls broke this sideways tightening range in their favor, the biotech bulls continued to benefit from that with the move up over the high of yesterday. So very significant turnaround. And again, trying to see a weekly bounce take shape. Still a weekly uptrend. Anything above 78, 72 is a weekly high or low. This weekly chart looks a little bit different than most names. If you look at a 2-week time frame, this is an inverse head and shoulders attempt. There are a few inverse head and shoulders out there on these weekly charts. The retracement on a lot of this weekly consolidation was more than the bulls wanted to see. Bulls ideally want to see 40% or less retracement to try and see continuation more easily, but 60% retracement makes that continuation move a lot harder. But it is on the table here. And I was actually looking at Ethereum in the cryptocurrency space as well. Look at the 2-day time frame for Ethereum. Wow, it actually turned around that momentum. Something's going on. Anyways, that's a notable move. So that 2-day inverse head and shoulders is close to confirming here. I was a bit surprised by the size of the move here after hours, but it's left shoulder and we topped out, and this is the right shoulder trying to form. Bulls have to get over 1722. V-shaped bounce on the 4-hour. Very impressive. Solar sector stood out very strong today. So we have a daily downtrend without much follow through. Look at the weekly chart here. EMA 12 support hold. That's a bull flag. And the energy, or I should say the solar sector, is definitely one of our lead bull sectors, because the pullback we've seen the last 3 weeks in SPY and QQQ, way more significant and unhealthy for bulls than for TAN here. Look at these individual names. Daily charts, ENPH. I was keeping an eye on these names to be potential bear laggards, but once we saw further weakness in the broader market yesterday, and it didn't really impact this sector very negatively, started to throw that out the window. And so now we have the bulls being positioned very well for any broader market bounce. And you can see today, big volume day, breaking many tops. Weekly bull flag confirmed for ENPH. FSLR also seeing continuation. This is the lead bull in the sector. Blue sky breakout. When was the last time you heard those words together? Daily EMA 12. So solar is clearly a lead bull sector in the market overall. And there came a point today where I was scouting a short, and I was looking at this top fishing play with 130.95. And at that point in time, we had a double top just under that daily resistance. And so I'm looking at this and saying, you know, okay, there's a potential top fishing play there, and we got a 5-minute uptrend to be keeping an eye on. And if that's lost, it'll be a convincing rejection from that daily resistance. And so I was weighing, do I want to short FSLR for a top fish? And the other setup that I was watching at that point in time was XLE. XLE confirmed our daily downtrend. Granted, no follow through at this point in time, but that's a daily lower high and lower low. So I say, okay, FSLR, lead bull in a lead bull sector. Yes, there is resistance, but the broader market is also strong. That's in one category. Or I can short the name that just confirmed the daily downtrend, that had a very weak start, has bounced multiple percent on the morning, but is just looking for an hourly lower high to be the result of that bounce. And so I defaulted to looking short on XLE, and it took its sweet time, and it definitely had me testing my patience, but I had a little day trade here and didn't get a whole bunch of follow through. I believe I was out even on this first 5-minute drop because of the size of that bounce right after it. But bottom line is, I chose the weaker name where the most likely scenario was favoring the direction I was looking in. I could say with 85% confidence, the most likely scenario for the XLE bounce is an hourly lower high. I couldn't say with, I could say with maybe 47% confidence that FSLR is going to reject from daily resistance and lose the 5-minute uptrend. So it was an easy decision to look to the name where the most likely scenario favors the direction that I'm looking in. In the end, not very worthwhile trade, but it saved me a loss from trying to short FSLR. Long story short, solar sector is strong. Definitely a lead bull sector, and if the broader market sets weekly higher lows, that sector is ready for fresh higher highs. The dollar is weak, down at the low of the day. So again, we have to see downtrends confirmed. I want to see an hourly downtrend confirmed. I want to see a daily downtrend or a 4-hour downtrend confirmed, and I want to see daily EMA 12 support lost if I'm going to have continued confidence in weekly higher lows shaping up in the broader markets. Again, this is just day one of this weekly higher low trying to shape up. The bulls have more proving to do, but again, for me, it's the most likely scenario, and it has been ever since we saw the magnitude of that bounce. And so now we're just looking for the clues and the details to confirm or deny that thesis of weekly higher lows. With the dollar pulling back, metals trying to bounce here. Gold is still holding this double bottom. And if gold can get over 1727, that's a daily trend change, and that'll be a weekly double bottom shaping up. So that's worth keeping an eye on. Miners today, trying to negate that bear flag. Still a clear weekly downtrend there. We know silver is weaker as well, but it's trying to change the daily trend. And the big thing for me is, can gold form this weekly double bottom? And then it will be all about 1808 if they can. And it depends on the dollar weakness. Oil, big bear confirmation of that bear flag. So notable shift here from the short-term bounce, hourly, just all bears. This was another reason I was looking bearish on the energy sector, because oil was a headwind as far as being weak. Energy bulls are very pleased with how they held up, with help from the broader market, obviously, because oil was extremely weak. Inventory report is tomorrow. Mid-video drink. But we got a daily and weekly downtrend persistent in oil. And the more we pull back on the monthly, the more likely a monthly lower high is going to be the result of the next bounce. Lots of space for it. Oil can bounce 30% from here and still form a monthly lower high. Uranium names started with some weakness, but with some nice recovery for CCJ. Some peers did confirm the head and shoulders, but it's a head and shoulders. Keep having a duck here because my mic is blocking my paintbrush. But we've got the head and shoulders confirmed with zero follow through. So that's keeping the uranium bulls hopeful that they can keep control rather than rolling over into weekly consolidation. Again, a big green broader market day definitely helping. CCJ holding up a bit stronger, still a daily uptrend, whereas other names lost the daily uptrend, just lacking bear follow through at this point. And natural gas, bears following through here as well. So again, the energy commodities continue to pull back here. Curious to see how CPI numbers come in as these commodities continue to pull back. But be very cautious with natural gas. Look at this lack of liquidity when the pits opened this morning. This is 1-minute candles and a 6% range. I've never seen anything like that. That has penny stock, that has illiquid crypto written all over it. And you can't use technical analysis on something that does that. So just be very cautious. Reason that there's a lack of liquidity in natural gas, margin calls in the EU is a reasoning that is being given. But clearly, Something wild's going on, and we know natural gas, the widowmaker, as it is called, can get wild. So if it's thinly traded, if its liquidity is low, it can get extra wild. But bears in control of both oil and natural gas in the short term. All about the weekly higher lows. We're watching for the clues all over the place. We know that we'll have to see hourly uptrends on the ETFs. We'll have to see 4-hour trend changes confirmed on our futures charts. We'll have to see the dollar confirm a 4-hour downtrend. We'll have to see the VIX confirm a 4-hour downtrend. And that's what the bulls need to see to have confidence into the weekend if we're going to be setting up the weekly higher lows. Powell tomorrow, 9:10 a.m. Eastern. A bearish reaction is not game over. That may give us the 4-hour consolidation that we know will eventually be inevitable. Aggressive bulls are going to be looking to enter on that consolidation next time we see it to try and position for weekly swing bull bounce positions. Appreciate you watching. Thanks for the likes and subscribes. Do good things, and we'll see you